Arvind Sanger. He joins us all the way from New York to find out whether one should be buying this fall at all. Arvind, hi, morning. Things seeming a little bit stable this morning, just some rebound. At least that is what the SGX Nifty and the Asian screen seems to be indicating. But should you be a cowboy just yet and buy this fall, Arvind?
Well, we've tried to be patient so far and not jump in till we saw where the coronavirus is going. But, valuations have gotten a little more interesting, and clearly interest rates are going to be, going down a lot on a global basis. I don't know how much they'll go down in India, how quickly. Some of the inflation in India may be a little stickier than in other parts of the world. But I think, liquidity is going to be plentiful. The question really becomes one, in a PE calculation, what the PE might look like, and therefore that is the one thing that gives us pause as to which sectors are likely to see hits to fundamental growth, and how long will that hit last. And so, having said all that, it's a long-winded way of saying we are looking to nibble, but we're being greedy about levels that we want to nibble, because the reality is that, we don't yet know how broad and how meaningful will be the coronavirus impact, because we have no historical precedent for this. But, as I think your technical person that you had on a while ago talking about VIX, it's clear that there's a lot of fear in the market right now. So therefore, there are some opportunities for some high quality companies, and that's kind of where we would start nibbling here.
But Arvind, what would you be interested in? If you're drawing up that buying list, would you buy more of the same? Would Reliance be, for instance, on your radar? Would it be a Bajaj Finance, HDFC Bank? Or would you move out of the comfortable favorites?
I think that at this stage, we're going to be somewhat more risk averse, because we don't know how bad the economic situation might get for for 1 or 2 quarters. Therefore, going with the higher quality names is the more prudent thing to do. And market leaders like the ones you mentioned are clearly in that higher quality spectrum. Would you look at somebody like a State Bank, which is the pick of the PSU banks, if you want to go down the risk spectrum? That's a possible name. And other than that, select mid caps, but again, higher quality names, which are which have absolutely rock solid balance sheets and don't have any promoter pledged issues. Those are the kind of companies that we'd be looking at.
Arvind, while futures seem to be stabilizing as of now, the fact that the virus has hit the epicenter, we've got the first case in New York, continuing to keep everyone on their toes in terms of which way really things will move from here. No idea about how this will spread, as you also just mentioned. In light of that, and in light of the global rout that we've seen, do you still see India outperforming vis-a-vis some of the other markets?
Well, one of the things we don't know, and one of the things that makes me very hesitant to make that case, is while India is less connected to the rest of the world, so global growth slowdown will not impact India as much. But if you look at what some of the experts are saying about coronavirus, there is some doubt whether or not warm weather will have as big an effect on slowing its spread as, let's say, any other normal flu virus does. If that does not happen, then India is quite a bit at risk in terms of its own potential exposure to coronavirus, and having a healthcare system which is going to be much less able to handle and much higher population density, which will make the spread faster. I think there is risk for some meaningful damage to health of a large number of people, and maybe a scary number to think about the kind of damage it could do to people's lives and deaths. And so therefore, these are things that are so unknown that it's hard to say that, we have a handle and therefore we should jump in with both feet. That's why we would start nibbling in high quality companies, but we would want to understand better how this virus plays out in terms of its impact in India before saying that India is going to outperform.
Raja, the larger trend here, Arvind, we've been asking all of our guests whether they would attribute this to risk or volatility. Because, while we're talking about volatility and the patterns that we've seen in the past, if this is actually entering full-on risk mode, that means a completely different strategy altogether. What would you say?
I would say, yeah. I mean, I think this is about real fundamental risk to economies. I mean, we're talking about, does this virus kill, tens of millions of people around the world? Based on some of the numbers we've seen, 30% of humanity gets it over the next year, and maybe 1%, succumb from it. 1 to 2%. Those are scary numbers. Those are not insignificant in terms of, the damage that they cause. So therefore, I think there's real genuine risk. Maybe this all turns out to be all fear based on lack of information, and it turns out to be much more benign and much less damaging, like H1N1 and other ones that have come before. So we're right now dealing with the unknown, and there's no way to say that the markets know better about how this is going to play out. So sometimes markets have to take a backseat to other experts who will tell us how this will play out in terms of actual effect on economies and on ways we do business for some period of time, and on actual damage that will cause not just to economies but to health of a large number of human beings.
Arvind, thank you so much for taking time out and joining in with your take.